Markets are closed today, but smart traders know this is where the real preparation begins. Hello, everyone. Welcome back to Your Nifty Guy. I hope all of you are doing well. In today's video, we are breaking down the monthly expiry, what really happened behind the scenes, where the smart money moved, and more importantly, what clues it's leaving for us. Because Wednesday's move won't be random, it's already getting built. So if you want to trade with a plan instead of reacting to chaos, stay till the very end. And if you are someone who's serious about improving your trading, make sure you hit the like button, subscribe to the channel, and turn on notifications because these levels can change everything. And just to address a comment from the last video, someone suggested that fixed deposits are the better way to go, and I do not know everything well. Like I mentioned, I'm not here to convince anybody if I know anything about reading the markets or reading what is going on behind the tape. Uh, if you find value in these videos, please watch them. If you do not find value, you are free to block me. Do not watch my videos. It's a free will world, right? And honestly, no surprises with the comments as well. FD feels safe when markets look confusing, but markets only look confusing when you don't understand them. The goal here is simple, not to run away from the market, but to learn how to read it. And as far as returns are concerned, the three generations of my family which are living under the same roof, there is not even a single FD which is going on. I have made sure of that. The return that FDs generate is keeping in mind the inflation right now is negative alpha return. So I do not suggest or I do not uh, tell anybody who is close to me to invest in an FD. Markets, yes, of course, they have the risk which is there, but then, of course, even with the risk adjusted returns, if you are system based, if you are systematic, you can beat the returns of FD multifold, right? So, yeah, that's about with the comment. Now we'll get straight to the markets again. Markets actually opened with a big gap down on uh, Monday, and post the gap down, markets did go sideways for a bit of time. Like I said, I will not be trading this particular week. I have my daughter's birthday coming up. Plus, I am experimenting with something else. The only feasible trade which happened was the break of this particular day low out here. Uh, Post which we also got a decent pullback, and at the break of this pullback, this could have been a good trade on the downside. Apart from that, there was complete volatility in the market. The VIX, India VIX, has again shot up around 4% at the close. At the highs, it was around 28. Yeah, that is the level side that I saw. It was well past 28, almost touching 29. So yes, that is the reason why I am asking you guys. See, there will be volatility. The At the start of the day, after the gap down, markets look like it is going to fill the gap. Uh, did not fill the gap. Gave a good double top here as well, right? So this is also could have been a good trade, right? So there is a concept called pivot gap explosion, wherein in case of a bigger gap up or a gap down, if you see that the markets are trying to fill the gap, right? So like in Monday's market, markets did try to fill the gap, but eventually failed, and that is known as a explosion pivot gap. And in such scenarios, what usually happens is market usually goes down in the original direction of the gap. Like yesterday was gap down, so markets went down. And even here, you do not sell the first instance that the market is trying to show some negative biasness, because simply because this can only be also be a profit booking or a retracement, and markets could continue higher and ultimately go on to fill the gap. And that is the reason why we wait for this particular formation. So yeah, this could have been also another uh, trade which could have been taken based on the explosion gap pivot setup. Keep that in mind for future trading. I also adjusted the hourly fib level in the live market. So like I have clearly mentioned, we did take this hourly. So I'll quickly show you what I did. So this was the original fib levels were out here with this particular low in mind, with this particular swing high and this swing low. But at the open itself, market created a new low, and that is the reason why with this particular low, I adjusted the fib levels to around these levels. And that is something which I always tell you guys that okay, when the markets are closed and if you are drawing these fib levels which are dynamic in nature, and if that particular low breaks, so this particular level which we had marked in the video would have held true only if this low would not have broken. But because this low was broken and we formed a new low out here from where we could see some pullbacks, that was the reason why I decided to readjust the fib levels in the live market. Of course, there was no trade based on the fib levels. The markets were in a complete negative sentiment. And if we look at I'll quickly draw the plan of action for tomorrow's trading. Today is market holiday. Spend it well, do your research. There are a lot of charts which are uh, a lot of good quality stocks which are available at a discount. So make sure you do research about which ones are you planning to add to your long-term portfolio. Trading is fine, but then the wealth is created in holding stocks in the long term. This is also which I have also been saying in this particular on this particular channel since the very start. So on the daily time frame, we still have a open-ended divergence on Nifty. Why do I mean by open-ended divergence? Nifty's market structure is a clear lower high, lower low formation, with yesterday's market also closing near lows and forming a new low, whereas the RSI is showing a higher high, higher low formation. So that is something to keep an eye on. But then, till the time the structure is not showing positivity, our bias will be for trades on the short side only, right? So that is something that we need to keep in mind. The higher time frame structures are very bearish right now, and although there are divergences, but then the first priority has always to be paid to the price action, right? Again, everything is completely in the negative zone. I will use this 4 hour swing to again mark a fib level on the charts. Now, like I said, this is again based on this swing and this low. If tomorrow again, if the market opens with a gap down and we are seeing further down levels, and we will be needing to readjust those for the live market trading. But for the time being, this is what we are keeping out here. We'll quickly write for our fib on the hourly time frame. Everything is kind of, the price action is speaking of negativity only. Yes, so out here again, I will be planning for in case if we open with a flattish opening or a gap down opening without breaching yesterday's low, uh, a trade, a trap setup can be expected, wherein if we see some fresh new sellers which are coming down below and we are closing below Monday's low, and then this particular high gets taken out, this will be a short scalp, right? Will target only about these levels. This is the last major swing on 15 minutes and an area of consolidation as well. So we'll be you're waiting for them only to achieve these targets. This will not be a trade which will be a long trade. This, sorry, not a long. By long, I mean a long holding trade. This will be a very quick scalp, quick entry, quick exit, right? Nifty has got good liquidity, and that is something that you can do with Nifty, which is a enter at market prices and exit at market prices. Good quick scalps you get. Of course, there will be some slippages, and the trades will not always be perfect, but then you can catch hold of some momentum out here. So this is a trap setup wherein we want people fresh new shorts to enter out here, and then once the high of this candle gets taken out, the logic is very simple. The stop losses of all those people who have created fresh new shorts will be triggered, and that is why we'll get a move with momentum on the upside, and that is what we want to capture. Otherwise, simple trade plan, just like we did for Monday's market. Below this, we are short with a gap, with a pullback. When we are approaching these levels and we see some negative price action, this is where we take a short trade, right? And long trade only and only above this fib level, with and that too again with a pullback. Now this looks very unlikely for tomorrow's market because we will ultimately be moving back above uh, Monday's high as well. But then, for safety's sake, for keeping in mind the higher time frame structure, the 4 hour time frame, I am taking this swing with this swing. And like in trading, if we are moving back above the previous day's high, of course we know that the market is trying to shift the structure, But then let's wait. Ultimately, we will focus for trades on the short side. So yeah, this will be the trade that I'll be more keen on. Uh, but then patience is the key right now. Like I have been asking you guys, do not rush into trades. Try to be very conservative, be very defensive in your trades currently, right? So yeah, that's the complete plan for Wednesday. Remember, the market doesn't reward opinions, it rewards preparation. Levels are clear, structure is forming now. It's all about execution. Don't rush, don't overtrade, let the market come to you. If you found this helpful, make sure to like the video, subscribe to the channel, and share it with someone who needs to stop guessing and start planning. I will see you in the next one. Till then, trade smart, stay disciplined. Cheers, guys, and thanks for tuning in.